Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for the Monday, November 9th, 2015. A little bit in the news today, especially with the market and from a volume perspective. We saw a little bit of above average volume today in the market. As you can see, just a little bit of an uptick based on the average. A lot of activity. It really kind of starts with IBM when Warren Buffett announced they'd taken a massive loss in IBM. And as you can see, IBM, who has really kind of been a laggard for the better part of the year, and one of the worst performing stocks out there in the market, just this year, kind of really going from, somewhere around 155 to 160 to 135, where the market is really kind of neutral, down about 10 to 15% on the year. But really, after the highs of 176, been a very consistent downtrend, just breaking down out of a support level right here at 137, 138, with the current price about 135. Look for that trend to continue, and really after it got beat up, you really didn't see any bargain hunters coming in here. It just kind of stabilized here after it got beat up here at the initial opening price here. And so IBM really kind of led the charge down in what was a pretty big day down for the better part of the overall market as a whole, with the S&P 500 down off about 1%. Most indexes were down off right about 1%. Nothing too big. Didn't see any big movement back up on the downside. Didn't see a buy the dip mentality really kind of slowing momentum. And honestly speaking, nothing today was too exciting, to be perfectly honest. Nothing really too crazy. You only had a few stocks really trade over 3, 4, 5%, either on the upside or the downside. One of those stocks was Apache. Apache had some takeover news come out earlier today, and Apache saw the market kind of move the market on Apache up about 10%, closing at about 13.15%. There was an unsolicited bid offer to take over Apache at a valuation of about $18 billion, and that really kind of drove it up to a current market price. Now, most times stocks trade in the future behavior, future expectation. That was the current price offering here on Apache, and Apache is trying to stop that, hiring none other than Goldman Sachs to build a defense around not being able to sell Apache. So that's going to be interesting to watch that stock. But really, kind of the news that, in my estimation, is obviously the Fed. You had basically a blowout unemployment report with the Fed last week, coming out on unemployment, added a ton of new jobs. Even though if you break down those new jobs, it was not that good. I mean, when you're talking about breaking down the jobs, you're talking about, once again, 55 to 69-year-olds going out there into the job market. But again, it still did produce a rock star jobs, and really it didn't drive the market down, not that much, but it did drive the dollar index up. And as you can see, the dollar index is just on a tear up here, currently at 99.11 right now, approaching that almighty number at 100. I don't know if it's going to approach in this run. I'll have the Forex report later on, but this is something that is going to have a big impact on stock market evaluations, because we know what a strong dollar does to those blue chip stocks. We know that those blue chip stocks really get beat up from a revenue perspective when the dollar is so strong, because people can't afford American goods that much around the world. And so the strong dollar isn't necessarily a good thing for this. But I don't see this changing in the long term, not right now anyways. You're looking at the Fed that is looking to raise interest rates. The probability right now of an interest rate increase is right around 70% in December. Again, I'm not there yet. I want to wait for another jobs report coming out in December before I really looked at what the Fed is going to do in December. Another strong jobs report in December, though, is the Fed's not going to have any more ammunition. They're going to have to raise rates for the first time in the better part of 10 years. And if they raise rates, that's going to aid the U.S. dollar. It's going to hurt currencies like the euro and the yen and other currencies that are traded against the dollar. And with the euro being so weak right now, looking at the euro dollar on its pace to parity, got underneath that 108 barrier, looking at a 105 price target on the euro dollar. And eventually, I do think that the euro dollar will pair, which will just make the dollar even that much stronger. So the dollar is really kind of the news. Is the dollar has been the news for the for the better part of the recent history, and with the strong dollar, you're going to be looking at corporate earnings that'll be decreased. What to look at here is right at that $1 mark. That is going to be very important for the U.S. dollar. I'll talk more about that in the earnings in the forex report later on today. So kind of the news of today was really the probability of an interest rate increase increasing to around 70% probable in the month of December. That's 1 month from now. Obviously, that's not that great for the stock market. It is good for the dollar, which could be bad for stock market evaluation. IBM in the news. Outside of that, the only two earnings reports we had today, one was Priceline, and Priceline just got absolutely butchered. It wasn't that bad of an earnings report if you actually look at just the numbers. The estimate on earnings per share was 23.11. They actually came in at 25.35, but an absolute beat down here, down almost 10% at 9.57%, $138 lost on their earnings, which is basically given up just what they've gained over the course of the last 2-3 weeks. So not that big of a deal, but the problem is I see this continuing to go down, potentially even testing down in those 1200 levels. The other earnings announcement that came out today was Dish Networks, and Dish Networks kind of had a mixed reaction to their earnings here. The estimated was 39.8 cents. The actual came in at 42 cents. Initially gapped down, but as you can see on the intraday data here, initially gapped down, came right back up in price to only close down 65 cents at 63.09. So the news of the day really is kind of the Fed looking to increase the probability of an interest rate hike coming into December based on the rockstar unemployment report. Maybe the Fed needs to read more about that, the breakdown in demographic on who is actually getting the jobs. Technically speaking, in the S&P 500, and this is what most people are kind of concerned about with the market recap here, is we're coming into these all-time highs. You've already driven up so fast. I'm looking for a retracement, but the truth is I've been looking for a retracement for quite some time. If we do get a retracement, look for it to come back down and test that 2050, 2040 level, which is right into here. If it gets underneath that 2030, 2040 level, look for it to test the 2000 to 1990 level. I do not see a big buying action this week unless the Fed says something. You do have a Janet Yellen testimony as well as 3 Mario Draghi testimonies or speeches coming in later this week. Not a lot of economic news this week for the dollar and the market itself. You have core retail sales, PPI report, and consumer sentiment. Those are all coming out on Friday. So nothing really to see here until Friday of this week. This is going to be a technically driven market, random news driven market. This is still a market where we're covered calls, short-term trades, but I don't think we should make any major, announcements on where the market is going to go until we get a little bit more evidence here. The technical market is still overextended to the top side. We won't get back down to any type of normal technical analysis unless we get another 30 to 40 point clip in the stock market, and then we can start talking about potentially bullish retracements in a short-term bullish uptrend. Until then, let's go out there, let's do what we do best. Let's go out there, let's find the trades. Sometimes we got to go to the commodities market, like the gold market. And by the way, looking at gold here, gold, silver, the commodities got beat up a little bit today based on some unfortunate news coming out of China, some disappointing economic news coming out of China. But I like silver right here. You're looking at silver coming into a major support level at right here at about 1440 to 1450. If you put this out on a weekly chart, you're right there at that support level. I like silver. If it gets underneath 1450, you may want to change your tune just a little bit in that one. And then the other one here is crude oil, down slightly today, right, settled into the 44.13 level, right there at the bottom level of that 44 to 46 barrier. If you put this on a daily chart here, coming right back down into that support level. If it breaks that support level, that's potentially a shorting opportunity. That's on the downside of 44, but it's held that support level very strong for a while now. And if you track it back here, very strong support level back here, back here as well as all the way back here in January of this year. So look for that level to be tested multiple times. If the sellers do, get a hold of that level, it potentially could come down on the downside there as well. Well, this is Matt Justice for Tackle Trading. Happy hunting out there and changing lives one trade at a time. If you need anything from us, go over there to tackletrading.com to get all your needs, from the daily market recap videos to the blog posts to the Tales of a Technician by Tyler Craig to the newsletters to everything else we do over there, from our scouting reports, which are our analysis on the forex market, the stock market, the options market, and the commodities market on a weekly basis. Tackle Trading, change lives one trade at a time.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.